Things are getting worse for the US economy, and I hope you're all getting prepared. Let's talk about what's going on in the economy. We've got silver sitting at just over 24 bucks. Gold is holding just over the $1,800 level as I'm recording this, and the economy, it seems to be deteriorating around us. I'm sure that all of you watching, if you've been out to stores or you've been out to restaurants, maybe you've been shopping for appliances or you've tried to get your car repaired, but I'm sure all of you have noticed that things are not as they should be. And when you go to do these normal day-to-day activities, in the past you wouldn't think twice about, now you can tell that there are problems lurking just behind the facade. These shortages, these price increases, this economic stagnation, this is what you get from central planning. And I want to get into all of that in this video. We're going to go over some of the most recent developments and also what we can do to protect ourselves. But first, I do want to say just a big thank you to all of you for tuning in today. And I want to ask a big favor of you. Help spread the word about what's going on with the economy, with the dollar, with precious metals. Please give this video a big thumbs up down below. Make sure you're subscribed to the channel so you can join the community of people who are awake to what's going on in the economy. And share this video with your friends. Anybody who you think could benefit from this information, please send the video along to them. Here's a headline from oilprice.com. Global food prices set to soar as the oil and gas crunch continues. And for all of you watching, if you've been to the gas pump recently, you know inflation is a real thing. You feel it in your pocket every time you go to fill up. But back to the article. Oil and gas prices have risen dramatically this year as a result of underinvestment and recovering demand. Higher fuel prices are weighing on global supply chains, with transportation and farming costs continuing to climb. The potential for a knock-on effect of rising fuel prices to be felt by other industries is becoming more likely. As oil and gas prices continue to rise to an all-time high, companies are finding it hard to maintain their costs and may have to shift this burden to the consumer any day now. And yeah, I've talked about that in previous videos. You know, oil is an integral part to almost all aspects of our economy. You know, we grow our food using tons of petroleum products, fertilizer, farm equipment. There's lots of energy that goes into producing the food that we all consume. And also any manufactured goods that you use or consume, those are shipped around primarily by train and by truck. And all of that relies on fossil fuels. So as oil and fuel begin to move higher, we are going to see that bleed over into other areas of the economy. Here's a quote from Abdulreza Abbasian. He's senior economist at the UN's Food and Agriculture Organization, and he told Bloomberg, "It's this combination of things that's beginning to get very worrying. It's not just the isolated food price numbers, but all of them together. I don't think anyone 2 or 3 months ago was expecting the energy prices to get this strong." Okay, well, certainly Keynesian economists and the Federal Reserve and our political leadership may not have seen this coming, or they just don't care, but I think anybody with a modicum of understanding of economics had a pretty good idea that when you print over a quarter of your currency supply into existence in 1 year, commodity prices might move higher, and that includes oil. As far as mainstream voices warning of inflation, Michael Berry issued that hyperinflation warning several months ago. And I did a video just a couple days ago about Jack Dorsey, the founder of Twitter and Square, so he's a billionaire. He's warning of hyperinflation as well. And I had a few people mention in the comments on that video that they thought Jack Dorsey was just pumping Bitcoin, and that's why he's calling for hyperinflation. And that may well be the case. It may be that Jack Dorsey is just hoping that by telling his followers that hyperinflation is coming, that they will go buy into Bitcoin and drive the price up. And of course, I'm sure that Dorsey will be just fine. He's a billionaire. But I wonder if he has some gold and silver stacked away as well, or if he is only relying on Bitcoin as his primary inflation hedge. Because if he's doing that, I think he may be in for a little bit of an unpleasant surprise. It was actually pretty funny. Peter Schiff and his son Spencer, who apparently is a big Bitcoin proponent now, they were getting into it on Twitter in that thread that Jack Dorsey started last Friday. And, I don't know, maybe Bitcoin is a good inflation hedge. It's just kind of untested. We've never seen how Bitcoin will perform in a highly inflationary environment because it's so new. So I don't think there's anything wrong with holding some, But for me, I wouldn't want to hold it to the exclusion of real hard tangible assets like gold or silver. I think this is the time-tested inflation hedge. And if I had to pick, I would definitely pick some silver over Bitcoin. It's nothing wrong with holding a little bit, but I think it's a lot more speculative than the metals. Now, as far as inflation and the Fed goes, we might see a taper coming up at the FOMC meeting in early November. And with all these inflation headlines in the news, it is possible that the Fed may try to get in front of inflation a little bit and actually begin to taper their asset purchases. Although I don't really view even a complete taper as getting ahead of inflation. I think the time for that is way past, and the inflation is already baked into the cake. The money supply has already been expanded. At this point, for the Fed to get ahead of inflation, it would require really drastic action, and I'm pretty confident that we will not see any drastic rate increases or drastic balance sheet reductions from the Fed. If the most hawkish thing they're going to do is stop buying $120 billion of assets every month, I don't think that we can really call that getting ahead of inflation. But we shall see what they say at the FOMC meeting. And from what Jerome Powell has been saying, we may see them attempt to taper. I mean, that is more or less the message that the Fed has been sending, that this meeting, assuming the jobs picture and everything stays moving along in the right direction, that they are going to taper. So who knows how that will manifest itself. Maybe it'll just be a reduction in asset purchases, or maybe they will wait a little bit longer. I think that if the Fed does try to tighten policy, however, it could result in some kind of crash, possibly in some of the assets that we've seen inflated into bubble territory, such as cryptocurrency, real estate, and the stock market. But rest assured, if there is any hint of trouble in the markets, I really do think the Fed will be right back to the rescue with accommodative policy to prop things back up. Now, of course, we probably will get some kind of excuse from them as to why they either can't taper or why they need to wait longer, or if they do end up tapering, but then they need to come back and start purchasing assets again, there will be some calamity around the corner that we'll be threatened with. They'll paint some kind of apocalyptic picture of what will happen if they don't intervene and they don't act, and they'll have everyone begging for more intervention before they reluctantly come out and start printing their trillions again. But we haven't even had the taper yet, and the economy is already slowing down and showing signs of further weakness. Here's a headline from CNBC: economic growth rate slows to 2% on sharp slowdown in consumer spending. The article goes on to say the U.S. economy grew at a 2% annualized pace in the third quarter, its slowest increase since the end of the 2020 recession. The economic growth rate slows to 2% on a sharp slowdown in consumer spending. The downshift came amid a 0.7% decline in disposable personal income, which fell 25.7% in Q2 amid the end of government stimulus payments. The personal savings rate declined to 8.9% from 10.5%. So, yeah, I'm sure disposable income is declining. If you think about it, disposable income declining in an inflationary environment, that is concerning. But what it represents is that more of individuals' income is going towards essentials, and it can't either be saved or spent on other goods. When the price of food and energy and rent and housing and all of those basic essential things for existence are on the way up because of inflation, yeah, disposable income is gonna decline, of course. And the fact that the savings rate declined is not a surprise at all. In an inflationary environment, first of all, you'd be kind of a fool to be just saving your dollars. Who would do that when you know that prices are rising? Saving lots of fiat makes absolutely no sense in today's environment because the Fed has shown that they are more than willing to devalue the dollar. So why would you save dollars? I would much rather be saving precious metals myself, something that can't be printed, something that actually has to be dug out of the ground. In addition to the fact that, people aren't complete fools and they know that saving during inflation is probably not the wisest idea, there's also just less money to save, again, because people are spending more of their income, more of their resources just getting by, just paying for the essentials of life: food, gas, rent, the basics, the very basic stuff. If you think about it, if disposable personal income is declining in just nominal terms, well, it's really declining even more because whatever money you do have left over after you pay your rent, you pay for gas, and you buy food, you can't go out and buy very much with it because it's been devalued for buying all those consumer goods, all those, things that you might buy in addition to the basics. It won't go as far purchasing those. So really, the consumer is going to be the loser as this inflation situation progresses. You know, I don't really see any signs of the economy getting better before it gets worse. Things really are getting worse, and I think it's probably just getting started. We're going to be paying for these economic missteps for years to come in the best case scenario. And who knows what the Fed is going to do next? They're stuck between a rock and a hard place. They can basically let us slip into the worst depression in a century, or they can stimulate and print and stimulate and print until the dollar is toast. That's where they find themselves. So it's time to get prepared, to get your hands on some real assets. Get out of the dollar, and of course, none of this is financial advice or any kind of a recommendation. I'm not telling you what to do, I'm just telling you what I'm doing. Everyone's situation is different. You've got to do your own due diligence. But as for me, I am stacking silver. I am trying to live as frugally as possible. I'm trying to save and get out of debt. I'm trying to stay healthy and learn some skills. And I think that is going to be the best strategy for what is coming. You know, real estate and the stock market and all of those things, there's going to come a time in the future when these asset bubbles collapse. They can't stay inflated forever. So there's going to be a time with great opportunities down the road for anybody who is prepared. Stocks and real estate, they're so expensive now. But I think that there's a lot of paper millionaires out there who are going to lose everything. And those with hard money, real tangible assets, they'll be able to acquire assets that are expensive today at fire sale prices tomorrow, because eventually our economy will recover from this. Unsustainable economic systems won't be sustained. It's that simple. But I do think things are going to get a lot worse before they can get any better. Thanks for watching, everybody. Stay safe. If you'd like to see more videos about investing in gold and silver, then check out these videos right here, and I will catch you next time. Happy stacking. Smart Silver Stacker, out.